Hey guys, Mike here again. And today we're going to be talking about the Uber stock. We're going to be talking about what makes Uber special. Is the stock worth a buy? Should you take another look at it? And just as a disclaimer, please do not construe any of this as legal, tax, financial, or investment advice. Please do your own due diligence. You are responsible for your own money and your own decisions. So when we look at Uber, there's probably three main things that we're going to look at and see how it brings value to the stock. We're going to be looking at their products, their product strategy, which arguably is more important than their product, and their financials, just kind of going over how much money they make, their revenue, and their market cap, and how it compares to other companies such as Lyft. So let's quickly look at Uber's products first. The first one they have is ride hailing. And this is basically getting a person from point A to point B, basically a taxi. There are definitely advantages to Uber over a taxi. Number one, you can request it from anywhere. You don't really have to raise your hand and stop a taxi on the side of the street. You request it from your phone, the car will come pick you right up immediately. Second big thing, it's automatic routing done with Google Maps. And so that means you're never gonna get scammed, you're never gonna get skimmed, you're never gonna get taken along for a ride like some taxis do. The third interesting thing that I've noticed is Uber cars, even though they're owned by a person, mainly Toyota Priuses, the in-car experience and the cleanliness is so much better than a taxi. The cars are generally newer, they smell nicer, they're a lot more clean. Drivers are sometimes more friendly, so I count all those things as a plus. The second big product they have is food delivery, which is expanding a little bit to do grocery delivery with their acquisition of Postmates. But essentially what this is instead of moving people from point A to point B, they're now moving food from point A to point B. So restaurant delivery, they're doing grocery deliveries, and this is done generally with UberEats, which you can order. And again, with their acquisition of Postmates, they're now doing grocery delivery and other things like that. The last big one that a lot of people might not have heard about, but is actually very small relative to ride hailing and Uber Eats, is something called Uber Freight. And this is basically instead of moving people or food from point A to point B, they are moving, they're a logistics company and they're moving cargo and they're moving freight from point A to point B. So if you ever see those big like Walmart trucks, those big UPS trucks, it's basically doing that, but at a scale for any company. So they're a third-party logistics provider. And so Walmart or UPS or even a small mom and pop shop can hire on demand an Uber freight truck to ship things for them. So those are kind of Uber's three products, but I think what is even more interesting is their product strategy. I would say those three products are the beginning stages of Uber's portfolio. But what I think is really interesting is their mission. So what I think Uber really cares about is not just ride hailing and not just Uber Eats, but just moving things from point A to point B. Again, with ride hailing, they're moving people from point A to point B. With Uber Eats, they're moving food from point A to point B. But they're starting to move into Uber Freight, which is moving, cargo from point A to point B. What if they do international overseas freight? What if they get into the airline space of moving people from city to city? I think this will be really interesting. Maybe they even get into public transit, which is basically moving people in mass from point A to point B. I think this really goes to show what Uber's strategy is. They're trying to expand, they're trying to build out this logistics network. But to do that, they're really trying to be the layer on top. So they're not actually trying to be a UPS, which hires its own drivers, buys its own trucks, and ultimately offers a service. They're not trying to be that. They're trying to be the platform on top that matches drivers with passengers or cargo. So what I think is interesting about this strategy is they don't really have too many sunk costs and they don't really have to spend too much money. What I mean by that is UPS has to go out and buy those trucks and hire those drivers. Uber Freight doesn't really have to do that. Taxi companies have to go buy the cars, buy the taxi medallions and hire, the taxi drivers. Uber doesn't really have to do that. Uber can scale super fast. So the interesting thing about this strategy where Uber is the third-party platform on top of everything is it allows Uber to scale super fast. They don't have to go into a new market and buy new UPS trucks or buy new warehouses or hire new taxis or hire new drivers. They can pretty much use the existing supply in a market and use that, get them onto their platform. But that's where I really believe Uber shines, and I really think that's where Uber strategy is coming into play. They're really trying to aggregate all of the drivers and all of the riders and all of the cargo onto their platform so they can have a dominant position. One thing that you'll see is this is starting to become a big player takes a large majority of the share market. When you get more drivers onto the platform, such as, Uber ride hailing, more drivers leads to less surge pricing and it leads to slower wait times, which leads to a superior product and a better experience for the customers. The more customers you have, that leads to more drivers wanting to be on the app, more drivers accepting more rides, more drivers being able to quickly get to the next ride. And so you see this cycle. More drivers leads to more customers leads to more drivers, and it turns into this natural flywheel, this natural cycle. And that's what Uber is really trying to achieve with their product strategy. They're really trying to build a platform that aggregates all of this demand and all of this supply to build the top platform that everyone wants to go to. And so to do this, what you'll actually see is, we'll take a look later on in their financials, they're spending a lot of money upfront. They're actually making negative dollars. They're losing billions of dollars every year. But their strategy is to really spend a lot of money upfront, build this moat of drivers, build this moat of customers, build this ecosystem that really builds on top of itself. And what they're hoping is that this ecosystem will be self-sustaining, that they'll aggregate a lot of supply and demand, and the long-term value of this ecosystem will eventually pay for itself. So Uber is really thinking long-term with this strategy. They're thinking 5 to 10 years out. They're really hoping that this initial investment of money to build out this ecosystem will lead to long-term ecosystem value, lead to long-term value for both customers and to suppliers and to Uber, right? They're hoping that with this ecosystem, they can start to take a cut of, all the revenue. They can start to charge more fees, and that's how they're gonna make more money long-term. On top of that, like I said earlier, this strategy really allows Uber to expand fast, both domestically within the US and internationally. That's where Uber sees a lot of growth too. A lot of their top markets are actually not within the US. They have a big market in Sao Paulo, in London. And so even though they're big in the US, they're also really big internationally. I think a big part of why I might not like Uber as much is they actually ceded the Chinese market to Didi, and they ceded the Southeast Asia market to Grab. These are huge markets, and although they might not make a lot right now, I actually think these companies are gonna make a lot in the future. And I would actually ding Uber for that. They gave up these markets. They did get a little bit of investment in these startups in the regional markets, but it's still not the same as winning these markets. And so I don't think Uber has that going for it internationally. The last piece of the puzzle that Uber's really banking on is self-driving cars. Remember the ecosystem of drivers and passengers? What Uber really wants to do is get rid of the drivers. Think about it. The drivers, they take a cut of all the fare rides. They don't work 24/7. They don't always provide the best experience. Sometimes they do provide a great experience, but not always. If you can replace this with a robot, a self-driving car that always provides a great, consistent experience and doesn't take a cut of the revenue, that's the holy grail. And that's what Uber is really going towards. So Uber will be in a dominant position if they can not only apply the self-driving technology to ride hailing, so getting people from point A to point B, but also to UberEats, also to Uber Freight, and other types of transportation. Remember what I said about aggregating supply and demand on their platform with drivers and passengers? The demand is the passengers. What they're really trying to do with their strategy is get people onto their platform. They want people to think about Uber as soon as they open their phone and they're thinking about going somewhere. And then in the future, with self-driving technology, people still will keep on using Uber, but the supply will have changed, right? They don't have to pay these drivers anymore. They will replace the drivers with self-driving technology. So just to kind of recap Uber's strategy, which I think is very important, it's all about getting more riders and getting more drivers and building out that ecosystem. It's really about being able to scale super fast, both domestically and internationally. And third, it's about self-driving cars and cutting out drivers at some point in the future with self-driving cars. So just based off of their product and their product strategy, do I think Uber's a good company? I would say yes. I think their products are solid. They provide a lot of value. I think the question is, will self-driving cars actually be a thing and how soon? And will customers trust it? I personally believe self-driving cars will be a thing, but not for probably 5 years, both from a customer perception point of view and also from a legal point of view. I think there's still a lot of safety things to figure out, a lot of customer perception things to figure out, and a lot of legal implications to figure out. A second question is, do I think Uber will build a strong ecosystem of drivers and passengers? Definitely yes. I think a follow-up question though is, how strong is this moat and how easy or hard is it for drivers and passengers to switch onto a different platform such as Lyft? I actually think it's pretty easy. So I don't think Uber, even with building this ecosystem, I don't think Uber's building a sustainable moat. I don't think they're building a sustainable and unique enough product that would drive customers to Uber over Lyft or other ride sharing apps. And on top of that, I think scaling internationally is very important and great for Uber. I think it's hard. I think every market has its own uniqueness. So for all those reasons, I am cautious based off of Uber's product strategy. I think it's a fine product strategy, but I think it's easily replicatable by other companies, and self-driving cars is still a big question mark. And I know there's other companies such as Waymo and Cruise working on self-driving technology, so that is still a big question mark up in the air for me. So let's take a look at Uber's stock and financials. So looking at the 1-year chart, we can see that at its high, this year, it was at about $40 per share. And at its lowest during coronavirus, it was at $14, about 14-ish, 15-ish dollars per share. And now it's trending at about $33, $31. I think the interesting thing is the coronavirus pandemic actually took a big hit on Uber's revenue and how many people are booking, but I don't think it took too much of a hit on its stock price since now and February. I think it's recovered. It's about $10 off, but it's not too bad. Now looking at Uber's market cap, it's about 53 billion, which is pretty big actually. So next, let's look at Uber's revenue. So for 2020, they made about 3.5 billion in Q1 of 2020. And this was about a 14% growth, which actually isn't that fast. When you look at Tesla, when you look at Shopify, they're growing their revenue at about, anywhere from 30% to 40% to sometimes 50%. Uber's really only growing at 14%. So it's actually not growing that fast compared to other tech companies that we've covered. And the other big thing about Uber is they're losing a lot of money. They lost 2.9 billion in one quarter alone in 2020, which is a lot. And it's only risen. They've lost 1 billion in 2019 Q1, and now they've lost 2.9 billion. And a lot of this is spent on driver acquisition. A lot of it is spent on other types of marketing to customers. And do I think this is sustainable? I think probably not. I think Uber needs to start cutting down on their costs and start increasing their profits, especially with their slowing rate of revenue. The one bright spot for Uber is, although in terms of revenue for rides, their revenue for rides isn't actually increasing by that much. It's only increasing about 2% year over year. But for UberEats and Uber Freight, which I previously talked about, which is food delivery and Freight is cargo delivery, they're actually growing pretty fast. UberEats is growing at 53% and Uber Freight is growing at 57%. So overall, these bets on UberEats and Freight could pan out into something big. I would still be wary because they are very small compared to their ride-hailing business, but there is a potential here. One interesting thing to call out here is actually in terms of segment adjusted EBITDA, which is a very fancy word for earnings before interest, taxes, depreciation, and assets, rides is actually a little bit profitable. EBITDA is not GAAP, so it's not generally accepted accounting principles, but it's still somewhat of a decent metric. And we can see that rides is decently profitable with a 200% increase. The interesting thing is Eats and Freight and other bets such as their scooters and ATG, which is their autonomous driving group, these are the ones that are losing a lot of money. But again, what I mentioned is they're investing a lot right now into these types of into these types of products to build out the ecosystem. So even if they're losing money now, they're hoping that in the future, they will see a lot of long-term value and a lot of gains and reap those benefits from building out that ecosystem. So based off of Uber's products, their product strategy, and their financials, do I think it's worth it? I would say probably not, unless they can prove out their self-driving cars, unless they can prove out that their ecosystem is a moat and is sustainable long-term and people won't switch onto other platforms such as Lyft. And we can see from their financials that they are losing a lot of money. Their losses are growing actually a lot year over year, which isn't the best sign. And we can see that their revenue growth is only in the 10 to 15%, which again isn't as good as other companies that we've covered, such as Shopify or Tesla. So I'm very wary about their growth. I'm very wary about their profits, and I'm very wary about their product strategy. In terms of product strategy, I can see other companies like Lyft building the same product, right? Lyft already feels the same in terms of an app compared to Uber. And I don't think there's a huge moat for Uber right now, right? As a passenger or even as a driver, I can easily switch from Lyft to Uber and also vice versa. So I don't think Uber's product strategy of building out this ecosystem is working all too well for them. I also think that their financials don't look very strong. So for me, I personally wouldn't buy Uber. Would I hold on to Uber? Probably. I would probably hold on to a little bit of Uber just to see what it might do. So I think Uber could be a buy at certain price points. If they fell to $20 per share, I would consider picking up Uber. But I think right now, for me, at their current price point and their current valuation, I don't really think Uber's a buy. Again, just as a disclaimer, please do your own research. You should not take this as legal, tax, financial, or investment advice. Please, you are responsible for your own money and your own decisions. Make smart decisions. See you guys. Bye.